Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jain from Dolat Capital Market Private Limited. Thank you, and over to you, sir.
Yeah, hi. Thank you, Lizanne. Good evening, everyone. On behalf of Dolat Capital, I would like to thank KPIT Technologies Limited for giving us the opportunity to hold this earnings call. And now I would like to hand the conference over to Mr. Sunil Phansalkar, who is head IR at KPIT, to do the management introductions. Over to you, Sunil.
Thank you, Rahul. Good evening and a very warm welcome to all on the Q2 FY2023 earnings call of KPIT Technologies Limited. I would take this opportunity to wish you and your loved ones a very happy Diwali, a healthy and prosperous Diwali. On the call today, we have Mr. Kishore Patil, CEO and MD, Sachin Tikekar, President and Joint MD, Anup Sabe, Whole-Time Director and CTO, Chinmay Pandit, Whole-Time Director and Head Americas, Priya Hardikar, CFO, and yours truly. As we always do, we'll have the opening remarks on the performance for the quarter and the outlook that we see today by Mr. Kishore Patil, and then we would have it open for questions. I would just request that we would have a hard stop at 6:30. So after that time, even if you have any more questions, please feel free to write to me, and we would answer those questions and publish them on the website as well as on the exchanges. So once again, a very warm welcome to all, and I hand this over to Mr. Kishore Patil.
Good evening, everyone. I'm very happy to take you through Q2 results for KPIT. First, I will go through certain financial numbers, then I will talk about employee side, then we'll give you some business outlook. We'll talk about also Technica acquisition. So, to begin with, I think the quarter, as you all know by this time, we have 27% constant currency growth year on year and 8.3% quarter on quarter. And the reported growth has been 17.2% and 4.8% quarter on quarter for the period. EBITDA has gone up by 33% and year on year, and net profit is 28% year on year. Now, while doing this, from EBITDA to net profit, during this period, the other income has gone down by rupees 58 million on account of translation losses of the currency. And that has basically impacted to a certain extent net profits. Also, there is an increase in the depreciation of 1.70 crores. On account of two things. One is amortization of licenses, which is 1.2 crores, and 0.50 crores or 50 lakhs, basically purchase price for partner allocation for goodwill. So after this, the net profit has gone 28% year on year. There is overall, if you really look at the TCV is 142 million, which we have won during the quarter, and the pipeline looks pretty strong, one of the best we had, with certain mega deals in the pipeline. So we feel very confident about the overall pipeline which we have, and that allows us to look at business very positive. During this quarter, there has been increase in increments which we had, and the increments have been one of the best in the industry. We had a double-digit increment, including our global employees, which has been again one of the highest we had over last many years. And after absorbing that, we have been in a position to which has a more than 3% impact on profit and loss account, which we have been in a position to compensate due to strong growth as well as other profitability improvement. On account of opportunities we are giving to our employees because of the strong growth and exciting technologies to work on, as well as the increments we have given, we see a downward trend in the attrition. While for the last quarter it was early 20s, but as we have a 90 days period, we see that what will be our attrition for the next quarter, and it will be less than 20% going forward in next few quarters. So we look at it as a very positive sign, specifically when we are growing strongly. On the overall, during this quarter, we also acquired a company called Technica for 80 million, as we had announced a month back. And this has been now consolidated from 1st October. The revenues for this entity will be about 42 million on a yearly basis with a 20% plus EBITDA. The standalone growth rate will be 15% plus for the entity, and we expect synergy to drive more growth with this entity. While this will be the consolidation will be done, the deal expenses in Q2 will be about 1.5 million euros, which we have already considered while giving the EBITDA numbers for the year. So we are very positive about Technica, and we have received very positive vibes from the clients on this acquisition. Overall, while the overall economy is a bit uncertain, we see that in our clients, which we have defined as T25, and in those clients, specifically the area on which we are focusing on, which is software-defined vehicle, we see that the clients are going ahead with their programs. And these are the very essential for them for their having a market share in the future models. So this is where we do not see any changes in their spend pattern. And while the overall economy is a bit uncertain, we see these commitment to these programs, and KPIT is very strongly positioned in this area. We are about 70% of the programs which are going on worldwide. We are a part of that, and some of these even new wins we expect will be in these areas. So based on the confidence, based on the positioning, and based on the areas in which we are focusing on, we believe that we are in a better position to really increase our outlook for the year. So the yearly outlook will be 31 to 32% growth on year, including Technica. Excluding Technica, our organic growth will be 23%, which is up from 18 to 21% outlook we had given earlier. EBITDA will be 18.5 to 19%. Earlier we had given 18 to 19%. So based on these areas, we feel very positive about the business environment and future prospects for the company. Thank you.
So should we open up for questions?
Yes, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. My first question is related to the Technica acquisition that you've announced. Congratulations on closing the deal. Just wanted to pick up on a couple of comments you made on synergies on the transaction. If you could just help us understand what are the sources of synergies for this transaction, both from maybe a client mining as well as an operational standpoint.
Hi, this is Anup here. I think most of us know, and if you can imagine a V, which is used in software development cycle, right? So our KPIT traditional scope starts from software requirements at the left side of the V, goes down up to software development, software integration, and then at the right-hand side on the top, it goes to requirements validation. Now, if you can increase the height of this V a little bit more, now it starts with system requirements, architecture and requirements, and on the right-hand side, it increases the system validation part. This is what the increase of the height of the V is what the Technica acquisition adds to us. What it means from our customer perspective is that we get to engage with the customer much early in the life cycle of the development of the software development vehicle at the system architecture stages. And in our software integration business, our ability to integrate at the system level becomes a significant differentiator, which means our stickiness to the customer would increase. And the system validation part of it also is a sticky business for multiple years. So that also engages us more with the customer. So in total, we get also an early advantage as well as stickiness throughout the life cycle of the program.
And just to add a few things, specifically in the SDV area where with the complex architecture, this has more relevance and meaning, and that is the reason we thought these are very important competencies for us.
Got it. That's helpful. My second question is on employee utilization levels. So I think we've had a significant pickup in hiring activity over the past 12 months. So just trying to understand where we are in terms of employee utilization at this point after the hiring pickup, and then what the utilization target would be in an ideal world for us.
So right now we do not go into the details too many on the utilization, and this because of it becomes very complex based on the business model. But to your point, we do have increased our hiring over last few quarters, and I mean in the first quarter we increased our headcount by 11%, second quarter by 8%, and so during this process, because specifically in the areas in which we are working, I think the time to take to make people productive is a little bit more than normal programs. Specifically, if you also hire certain freshers from the college, and you will see this utilization going up in next 2 quarters. We have a opportunity to increase our utilization certainly by a few percentages.
Got it. That's helpful. And my last question is around the organic revenue growth upgrades. I think the midpoint of the previous constant currency revenue growth guidance was about 19.5%, and now we've said it will be 23% plus. So it seems to be 350 basis points at least in terms of organic revenue growth guidance upgrade. So just trying to understand what you're seeing in your deal pipelines, and what's giving you the confidence of taking the organic revenue growth guidance higher?
Chandra, this is Sachin Tikekar. And if you look at what we have actually said, there are 5 large engagements that we signed up with 5 different OEMs, 3 of them in North America, 1 in Asia, and 1 in Europe in the last quarter. And then there are 2 additional large, what we'll actually call mega sort of engagements that are in the pipeline. The pipeline actually has increased to about 142 million, and that also gives us the confidence. So essentially, just looking at the kind of demand that we have generated, and on the other hand, our ability to also scale has gone up. The attrition is going down a little bit. Our ability to attract talent is going up. So the combination of the two gives us the confidence that it's time to sort of upgrade the guidance in line with me.
I'll just clarify one thing. 142 million is we have to be one that is during the quarter, and the pipeline is the strongest. We don't give the TCV value.
Yeah, thank you, Kishore.
Got it. That's helpful. Thanks for taking my questions and all the best.
Thank you.
Thank you. The next question is from the line of Pratap Maliwal from Mount Infra Finance Private Limited. Please go ahead.
Hello, am I audible, please?
Yes.
Yeah, thank you, and thank you for taking my question. So I was just looking at the geographic numbers. So we see that in the last 3 to 4 quarters, the US geography has been about 32.5 to 34.9 million range. Asia, we see, the revenue has been declining with the past 2 quarters. Now, with the macro headwinds coming in, the top of inflation and recession in Europe, particularly Germany, which is a key geography for us, it might be more vulnerable due to energy dependence on Russia. So what factors can actually protect our growth and revenue base in case some of those macro headwinds do actually materialize in terms of recession going ahead? What can protect our growth base?
If you look at, I think your read on the large macro trends is true. We have to bring it down to what we do and the industry that we serve, which is mobility, and we do software for them and software-defined vehicles. There are clear indications to us that the spend on software-defined vehicles will continue to grow. Within our T25 clients, we have deep engagements with them already. That gives us the confidence that in spite of the macro trends that you see, will continue to have growth in the foreseeable future, in the near immediate future. As far as the geography question that you brought out, we are happy to see Europe is growing robustly for us in spite of the challenges at the geography level in Europe. And that's because, again, we have 7, 8 of our T25 clients are in Europe, and we are engaging with most of them in a very meaningful manner. And that's why we have seen that growth. When it comes to the Americas and Asia, you see that it depends. All of our T25 clients are global in nature, and the revenue actually shifts from one geography to the other, depending on where we are going with them and how we are engaging with them. That's why I wouldn't worry too much about what happens on quarter-on-quarter basis. What we can tell you is, going by our annual operations plan, we are actually on target when it comes to Asia and America. There are no surprises, and actually we are slightly ahead in Europe. And we have also changed the guidance that we've given. So that's probably the way to answer your question.
And just to add in that is, as Mr. Tikekar mentioned, is out of 5 wins, we have 3 wins in North America and 1 in Europe. And I think we are probably one of the in a very well balanced revenue portfolio. Yes.
Okay, thank you, sir. And my second question would be around our architecture and middleware consulting vertical. So if I remember correctly, we had very good growth during Q1, and now in Q2 we've declined slightly after strong growth. Now, this particular vertical is, as I understand, is considered to be an existential type of program for the automakers, and most of the future projects, I believe, would be in this area. So can I just maybe get an update on what was the reason for the decline in this segment?
Sure. If you look at the middleware programs, all of them are long-term programs. Most of the engagement that we have signed up, and we are, as Mr. Patil mentioned earlier on, we are actually part of the 7 large engagements out of the 10 serious middleware programs that are going on. These are large engagements with large milestones. Hence, I would actually hesitate to look at quarter-on-quarter. If you look at the year-on-year number, it's in excess of 32%. And most of our growth, the growth from this, we believe, on year-on-year basis, will continue to be very strong going forward. And what it's also doing, since we are working on the middleware, we are touching all aspects of the vehicle. It's also helping us to get more engagements in the other areas, right? So it's also a sort of a beachhead. So on its own, it'll have tremendous growth, and it will also impact growth of some of the other practices in a positive way.
Okay, so just trying to assess that because a lot of the strategic programs in the auto space would be done with keeping the next many years in mind, maybe 4 or 5 years in mind, when it comes to programs around the case mobility. So there's no real change. That's what I'm trying to assess. Is that the correct answer, that there's no reason to look too much into it, and that trend is still facing the strong tailwinds?
We are very. That's really our clear differentiator in the marketplace. Correct. There are very few companies who can do what we are doing. That's why 7 out of the 10 OEMs are engaging with us. These are all long-term programs. There are tailwinds, and we are confident about the growth in the immediate future.
Okay, sir. Thank you so much for taking my question, and congrats on a good set of numbers. Thank you, sir.
Thank you very much.
Thank you. The next question is from the line of Karan Uppal from Phillip Capital India Private Limited. Please go ahead. Karan, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks and congratulations on a very strong set of numbers and execution. Just wanted to understand the run rate.
Sir, your audio is breaking up, Mr. Shah.
Is it clear now?
A little better. Please proceed.
Yeah. So congrats on a good set of numbers and execution. Thank you. Yeah. The first question is, in terms of Technica, when we have announced the acquisition, the FY21 revenue run rate used to be 47-48 million euros, versus the presentation now talks about 40-42 million euros. So first, to understand, this is FY21 run rate, and is there any intercompany transaction which will knock off once we acquire as a whole, and there would be a growth of 15 or 20% on this 40-42 million euro once we start consolidating for FY22?
Yeah, so the way to look at the Technica numbers is not add up the four entity numbers together, because it is majority intercompany. So the 42-44 million that we have said right now, that's the actual run rate for the year. Because, for example, Technica US and Technica Germany, 90% is intercompany. So you should not add up all those numbers, and that is not how it will happen. So when you do the consolidation, it will be around the 42-43 million mark that we have currently set.
And the question on FY22 run rate, so this would have a 15-20% growth rate, right, once we consolidate?
Yeah, that's what I think Mr. Kishore Patil said in opening remarks, that on its own, it will be a 15% plus growth rate. And with synergies, we can actually look at a better growth rate than that.
Okay. And just wanted to understand, because slightly a bigger ticket acquisition, will we open to take a debt on the books, or this would be largely internally financed?
We've said in the past also, this whole acquisition will be funded with internal accruals.
Okay. And just a reply to Mr. Anup sir. So it looks like it's a good acquisition and could be in demand going forward. So wanted to understand why then Technica has sold at a relatively good valuation multiple to us.
Yeah, I think, frankly, after the acquisition, a lot of companies asked us how you have done the acquisition. I think it is, basically we have been engaged with them for quite some time, and there is a commonality of purpose and excitement. These are technical experts in certain area, and they want to achieve a certain goal. In the area of SDV, they believe they can play a meaningful role in the industry. That's what they wanted to achieve, and that's why they thought the KPIT was a complementary player. From that perspective, we have been working now for some time on talking about it. So that's why they felt very comfortable coming together, so that they can fulfill their promise.
Okay. And the last question, if I just look at the 23% growth rates which we are guiding for organic business, I do understand the words which we have used is 23 plus, but if I look at 23% and the ask rate for the next 2 quarters is 1.8% in constant currency terms. So are we factoring a bit of a seasonal slowdown and furloughs, or also some conservatism towards European clients because of the gas shortage and the recessionary pressure, or is it one should read that what we have said 23 plus is at least 23% growth, it could be higher than that?
So there are 2 points. One is we have said 23% plus, that is point number 1. The second thing is we have factored Q3, which is a seasonally weak quarter to some extent. We hope we can do better, but still it is weaker as compared to the other quarters. So that's what we have factored a bit.
So any client has some...
When we say 23% plus, I think 23% is the bare minimum that we do.
Okay. And any client from Europe in terms of OEM has shown any kind of caution because shortage of gas may lead to some amount of disruption in plant operations. So are we foreseeing any kind of this risk in the next 2 to 4 quarters going forward?
As we mentioned earlier on, our engagements with European T25 clients are stronger than ever before. In fact, you've seen the growth in the last 2 quarters that we have demonstrated. We have no reasons to see that there is likely to be slowdown. Yes, there are macro challenges. However, if you bring it down to mobility and what they have to do in order to remain relevant as an OEM, that's the spend that they have to have. And fortunately for us, we are in that space where they are committed to spending that money. So we don't see in the immediate future any kind of slowdown in Europe.
I think what we believe is also the area in which we are working. I think even if they reduce their spend, I think our spend will at least remain same, if not increase. And that is what we are seeing at least in some clients. This is our thanks for the next 6 months.
Okay, thank you and all the best.
Thank you.
Thank you. The next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi, good evening everyone, and congrats on a strong quarter. This quarter you mentioned that you have 2 mega deals that you could close over the next 3 to 4 months. Historically, I think this is the first time you're characterizing these deals as mega deals. Historically, you've called them large deals, and you've reported $60 million kind of deals. So just wanted a sense in terms of how is a mega deal different from a large deal? Maybe roughly, if you could give in terms of size and the scope of work typically. And second question was, I think we have done a few interesting acquisitions over the past year, and those have sort of added reasonable capability, and you also have this middleware stack. So all coupled put together, do you believe that the deal sizes for you itself will inherently be much larger than what we used to close in the past? So these were the 2 quick questions. Thanks.
Nitin, I'm glad you noticed something different. Actually, we want to call them mega engagements and not deals because these are long-term partnerships that we are building with our T25 clients. And yes, they are different. These essentially the differentiation is these are 3-digit sort of engagements that spread over 5 to 6 years. And there will be 2 of them in the next few months. And essentially we'll work very closely with the client on their roadmap for the next 2 or 3 production programs. And there will be some incremental changes in the technology driven mostly by the changes in the central architecture in the middleware. So we are very excited about these engagements because it also speaks volumes about the quality of the engagements, which, now we are actually becoming trusted partners to some of these OEMs, and that's what we really wanted to do. And our hope is that most of our T25 clients become, we become trusted partners to all of our T25 clients over a period of time. I think that answers your first question. And the second was about, with the acquisitions, we have added capabilities and so forth. What does that mean? I hope that the new term mega engagement answers that question. Obviously, because of the acquisitions starting with PathPartner and now Technica, as Anup explained earlier on, it actually increases, we stretch the V on both sides, and we continue to differentiate ourselves from everybody else and create larger value for our clients. So we'll see, hopefully, we'll see more and more of such engagements in future.
And if I may add a bit, because PathPartner's gives us something which is close to hardware kind of capability, low-level programming and Technica, as we discussed, increases the size of V. We are seeing, and it won't happen in every deal, but the couple of deals we are talking about, there basically the client is giving us the full engagement, and that is what makes it a big difference. And so we do expect, we do hope that we are in a position to capitalize on these competence.
Sure. Thank you. Just two more quick ones. So one is, so far, most of the large deals that you have won have been European. By when do we start really seeing some traction in the US as well in terms of large deals? Or do you think that US is not a very large deal kind of a geo and just has smaller size but multiple of those? So that is one. And second is, do you think the commercial vehicle space is sort of reaching an inflection point at some point to really start driving growth? So those were the two things. Thank you.
Nitin, first of all, don't say that US has not grown. It's grown substantially over a period of time. It's 40% of our business. And
no, I meant large deals. Not specifically those.
I know what you mean. But that was on the lighter note. We announced 5 large engagements during the last quarter. It just happens so that the 3 of them are OEMs from the US, 1 of them from Europe, and 1 of them from Asia. So we think that the growth in US will be 3-pronged. One is the existing passenger car OEMs. I think we continue to increase our footprint in them. Second is US has the highest number of what you will call the new type of OEMs. We have started an engagement initial engagement, but in a meaningful manner with 2 of them. So that part, we think that over the next 2 or 3 years will also start to fire in a significant way. And the third part is what you talked about, which is, going to your second questions on commercial vehicles. We have covered almost all the key OEMs in the US. And if you look at our growth in commercial vehicles, which is higher than passenger car growth, obviously on a smaller base, it's actually propelled by our engagements in the US. So we continue to remain bullish on our prospects of growth in America. Riding on these 3 factors: passenger car, commercial vehicles, and the existing OEMs and the newest kind of OEMs. I think that was the first. What was the second part? Was on the commercial vehicles. No, it's a great question, and that's something that we need to. We've been so busy and tied up responding to OEMs in the passenger car area. We really need to create a separate bandwidth to do justice to commercial vehicles. Yes, it is reaching inflection point. If you look at our growth, it's growing. It's growing on the back of a handful of T25 clients that we have in commercial vehicles, but they are mostly from the US. There are some important ones in Europe that are part of our T25, and there are 2 in Asia as well. We really need to bring in focus and make sure that we do justice to that opportunity as well.
Thank you so much,
Sachin. A short question, but I hope it clarified.
Sure, absolutely. Thank you so much, Sachin and Kishore. Thanks a ton. All the best.
Thank you.
Thank you. The next question is from the line of Karan Uppal from PhillipCapital India Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Just two questions from my side. One is on depreciation. So given the Technica acquisition we have closed just now, we are running at around 32 crores on the depreciation line. So how will this change post the close of Technica acquisition? And secondly, on the FY24, now FY23, we understand that it has been a phenomenal year for you in terms of organic growth rate. But any early indications on how FY24 may look like?
Okay, so I'll answer the depreciation one. See, the depreciation for Technica will be worked on post the consolidation of the results from Q3. As we speak, it is not part of the results as of 30th September, and we will disclose once the working upon the consolidation happens as per Ind AS at a certain date. And it will have a significant impact on depreciation because of the goodwill that will arise upon system.
Okay.
Ma'am, the audio from your line is breaking up.
Yeah. Can people be on mute? Yeah. So, for the next year, we will give the guidance at the end of the year, generally in the month of April. But what we have mentioned, we see that overall outlook for us, but we will give that at the end of the year. But what we have mentioned in the past is for next few years, we see a opportunity to grow 20% year on year. That's what we have mentioned in the past. But we will take our view closer to
Okay. Thanks a lot.
Thank you.
Thank you.
Well, I hope you're able to hear the answer clearly.
Karan?
Okay.
Thanks a lot.
Sure. Thank you.
The next question is from the line of Andre Purushottam from Cogito Advisors. Please go ahead.
Thank you and congratulations for a consistent record of EBITDA and revenue growth. I had two questions. One was related to Technica and the other to operating expenses. As far as Technica is concerned, you said that Technica allows you to come in earlier in the software development cycle. Now, does that also mean that the value side of the deal will increase as a result of this? That's question one. And the second question is, are there any capabilities that Technica brings that may allow you to get clients outside the T25 that may attack at this point of time?
Let me answer the two questions. As we mentioned earlier on, I think we were answering Nitin's question earlier on about, yes, it does increase, it does stretch the deal on both sides. It's not only we get engaged earlier in the cycle, but we also stay much longer because we are stretching the right side of the V as well. And that actually leads to more meaningful, longer-term engagement. So we absolutely see that going forward. The second question was whether the good thing with Technica is their major clients are our major clients. So there is a good amount of overlap. And there is a lot more that we can do together in our other T25 clients with Technica. So that's something that we are going to focus on immediately. Having said that, Technica also has one or two clients in the Bay Area that are of interest to us from the new OEMs perspective. So those are the two that we'll look at very closely. But I think that's going to be our go-to market pretty much with Technica. Anup, do you want to add?
I just want to reiterate the focus from Technica acquisition perspective is leveraging within our customers, existing customers, and their existing customers. So the theoretical answer of whether we could go out of T25 is yes, but the choice remains scaling up with our customers and their customers at the moment.
Okay. And as far as the operating expenses are concerned, is it possible for you to give us a broad sense of the variance of both Q-on-Q and year-on-year, and both on the operating expenses and the EBIT margin? And would it be right for me to presume that the salary hikes and the lower utilization because of a higher fresher intake may be largely responsible for the lower profit figure?
So as we said earlier, the gross impact of the salary hikes was around 300 bips. But if you see at the net impact on the EBITDA line, it's about 90 bips. So that is majorly because, not majorly, all of it is because of the salary hikes as compared to the last quarter, the reduction in the EBITDA. If we look at the other expenses, I think on a broad level, because we are slowly getting back to operations starting from office, there are certain expenses that are going up. But obviously, I mean, if you look at the growth in those expenses over a period as compared to the growth in revenues, that has been lower, and that is how we have leveraged and improved our profitability.
And I would like you to appreciate that our profitability is not low. I think in the quarter where there is this, I think it is in the range what we have mentioned.
Yeah, and I think we should also look at the year-on-year numbers. Those are the real reflection of the performance. And on all three parameters, whether it's the revenue, the EBITDA and PAT, I think we have demonstrated reasonably solid growth. Yeah.
So can the structural margin trend improve going forward? Because that's what you are seeing to indicate, right, in terms of your outlook. And what would be the contributors to the improvement in the structural margin?
Can the margins go up in the near future? And if yes, what would be the contributors to that?
So we have given right now 18.5 to 19, I think, which is we have improved our outlook on the profitability, and that is what it will be for this year. Going forward, we have a certain levers in our hand. Apart from leveraging, first is the growth, which is leverage over fixed expenses. We always invest ahead of time. The second is offshoring. I think many of these deals have started, which have, as I said, large deals and etc. So after 6 months to 8 months, we have an opportunity to move a lot of work offshore. We believe our realizations will also improve. So these are some of the areas which we would like to say.
Okay, thank you very much.
Thank you.
Thank you. The next question is from the line of Ankit Agarwal from Yellowstone Equity. Please go ahead.
Yeah, hello. Congrats on a decent set of numbers.
Thank you.
My first question is, in the infotainment segment, one of our deal from BMW. Given that BMW is a co-client for us and infotainment is a segment where we also have service offerings. Just trying to understand, did we participate in the deal and what is the kind of trend in terms of market share we have with BMW?
We would not like to comment on a client specific project or this, but I can only tell you that we have a very significant market share in that account, and we are probably one of the largest players in that account on the software side.
Okay. And in general, just a broader question then on the infotainment segment, is that still a focus area because you don't mention it in the footnotes in the feature development integration?
No.
The third business unit, which we talked about, the cloud and connected services, that includes connected infotainment and digital cockpit. And that has actually grown quite significantly.
Okay. Thank you. And then the second question is, just in general, some of the peers also announced that they are focusing more on system integration services. So what is the kind of competitive intensity you're seeing specific to integration space?
The way we look at our clients, as I mentioned earlier on, I think our T25 clients is where we are moving to a space where we are becoming trusted partners. And with many of them, we work with them on long-term engagements. And as far as competition is concerned, we don't see much competition in those where we are trusted partners in, because in most areas that are relevant to us and common to them, we are the only ones. And that's what we are going to do more of going forward. There are a handful of clients where we are in that position today, and we hope that that number will increase substantially over the next few years. Having said that, in other T25 clients, we do see competition, but not necessarily across all of our practices, especially in the middleware area. And we feel very confident about all of our practices and growth thereof.
On the integration side, I think we have some significant advantage in terms of technology and the solutions and the platforms we have put.
Yes. I think this system integration word is a very sort of a 25,000 feet kind of a word, and it is used differently in different industries. So if you look at industrial automation, system integration means completely different. Manufacturing, it would mean completely different. In our space, in system integration, I think we are definitely the most, from a competency perspective with Technica, I think we would be at the top now. So we don't see any challenge in this particular area.
Okay. Thank you for answering it very comprehensively. That's it.
Thank you.
Thank you. The next question is from the line of Hiren Ved from Alchemy Capital. Please go ahead.
Yeah, hi Kishore and Sachin, and congratulations at the outset for great numbers and superb execution.
Thank you very much.
I just had one question, is that how do you see the environment on the supply side easing out in terms of, hiring talent both at the fresher level as well as at the lateral level, considering that you have a very strong pipeline? Do you see that things have eased, or are you finding it, as difficult as it was a couple of quarters back? And as a result, are you even thinking of offshore centers outside of India?
Yeah. So I will answer it in a couple of ways. Overall, we see a more easing of the supply chain over last few months. Mainly because of two things. One is we see the attrition going down, which is a very important part for us because we can leverage our current employees much better. That is the first part. The second is, of course, with more experience of these people, we can leverage the freshers also better. And again, we see campus recruitment coming back and more availability of people in that. Having said that, looking at overall our what we intend to do in the next few years, we have taken a program called Scope, which will allow us to double our capacity in the next few years. At least create that kind of a capacity by increasing the centers in India, centers outside India, then creating a better competency development, automation, then improving the processes internally. So how do we build a competence at a scale? From that perspective, we have taken this program, and we have made some significant progress in that area, having one center in India, in Kochi, one center in Egypt, and of course, with the acquisition, we have a couple of centers in Eurozone, time zone. So we are certainly looking at in all the way to improve our scalability.
Okay, thanks and best of luck for the next few quarters.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to one per participant only. The next question is from the line of Dave from Investec. Please go ahead.
Hello. Thank you for providing me the opportunity. Am I audible?
Yes.
Okay. So you report growth in for geographies in dollar terms, right? So can you report in CC terms? So that will be helpful for comparison.
I think what we have been doing as a practice is reporting all the metrics in US dollar reported terms. And that is what we have been doing. But we'll have a look at it, whether it is feasible and on a consistent basis.
Thank you.
Okay, thank you.
Thank you. The next question is from the line of Karan from Dhanki Securities. Please go ahead. Karan, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is from the line of Chirag Kacharia from Ashika Institutional Equities. Please go ahead.
Hello. Congratulations on good set of numbers. Sir, I have a few broad strategic questions like what's our plan with respect to the domestic Indian market going forward? And also the domestic PLI which are being supported by Government of India and many industrials. So how we look into those tailwinds which are available for the domestic business? And also your outlook with respect to US and Europe, because in Europe certain PS have been affected due to this Russia-Ukraine war, and is there any one-off or a one-time business we've received in last 2 quarters, or then also in the same effect in current quarter order book, which you can guide some light on same?
So first, I will answer on the Europe and US. I think we have shown a consistent growth there, and our pipeline is strong. And we have not all our conversation has been positive. We talked about the logic why the space is there, and at least we are confident about what we have talked about the growth in both these regions. In terms of India, some of these T25 clients are really having playing in Indian environment, and we are working with them which are there. I think in certain specific new technologies, we are seeing what we have, whether that can be leveraged for a specific, very selective Indian market clients. And we are doing that on a very, very cautiously. But if we see a good realization and scale, then we would do that. And we are considering it in terms of certain changes which can happen in Indian environment. Now, overall, in India, we have been involved in certain policy making, supporting different government bodies. We are leveraging our understanding and experience what we have on a global, because we are a part of many standards committees in Europe, etc. So we are leveraging that experience for Indian market and selecting specific opportunities which we would have, generally through T25 and some by exception.
Okay, so fine. Thank you so much.
Thank you.
Thank you. The next question is in the line of Nitin Sharma from MC Pro Research. Please go ahead.
Yeah, hi. Thanks for taking my question. Congrats on the good set of numbers. 2 questions, if I may. Just want to understand, is the work from office is fully started at your end? And if not, then what kind of potential impact and timeline that could have?
What we have decided is we are moving from work from home to hybrid. That's the part that we have initiated. And we're going to take one step at a time. For instance, those employees who are already here in Pune and Bangalore, where we have the largest presence, or Kochi in future, we are encouraging them to come to the office twice a week. And many of them are actually coming on their own. That's something that we have started. Secondly, we also believe that the training, especially that of freshers, and we need to have more interaction with them. So that's another part that we will start. However, we are not in a hurry to go to the other extreme from work from home. What we will do in over a period of time is to bring in sharper focus and some guardrails around the hybrid model. That's something that we will do here in India, where 80% of our employees are. And in other geographies, we'll see, depending on the convenience of the clients and the convenience of the employees, we'll figure out what's really right for them. Right? So that's the approach that we are taking.
Any immediate impact on the operations cost for the hybrid work? Because has to be some cost from the training as well as office-related expenses this year, if possible.
I think it's already baked into our annual operations plan. We had already thought that that people will gradually start to come back, and that we have baked in. So it's not going to be a surprise to us.
One impact we had was the engineering school which worked virtually last 2 years. We thought that their training needs to be little longer when they come into corporate world. So our training cycle has to some extent increased, but of course that's a part of our plan.
Okay. And if I can squeeze a bookkeeping question on the tech.
Sir, may we request that you return to the question queue? There are participants waiting for the
Thank you.
Thank you. The next question is from the line of Ritwik Seth from One Up Financial. Please go ahead.
Yeah. Sir, just one clarification on the depreciation question. Actually, the line was not clear. So, the impact will be significant or it will not be significant?
Which one are you referring to? Are you referring to?
So the Technicia acquisition and the associated depreciation which will come in, you mentioned that, the impact. Sorry?
I said we can't right now mention details because the consolidation has not yet happened.
Yeah.
We will go through the process and then disclose to the individual.
Okay. But you mentioned something that it would be significant or insignificant, so I missed that part.
No. What we have said earlier is when we talked about when we signed the deal, what we have said is the deal is going to be EPS accretive, and we had considered certain purchase price allocation, which will impact our P&L. But despite, after that impact, we will still be EPS accretive on the deal. That is what we have said. Now, the exact quantum of how much it would be and will all happen once we do the consolidation. And we have a year to do it. So what we have said is it will not have any material impact this year. And when we crystallize the numbers, we will let everybody know what are those numbers.
Sure. Okay. Thank you and all the best, sir. And wishing you a happy Diwali.
Thank you.
Thank you. The next question is from the line of Hasmukh Visaria from SUD Life. Please go ahead.
Hi, thanks for the opportunity and congrats on great set of numbers. So, my two questions. So, growth from non-top 25 clients seems to be muted from past 3 quarters. So, any update on the same? And secondly, if I look at headcount addition YOY, it is nearly 50% versus growth of, let's say, 27% YOY this quarter, and for the full year as well, nearly 23% sort of growth number. So any reason for the gap, if you can highlight?
No, we have already said that if you look at the last at least 2-3 quarters, our headcount addition has been much higher because we are looking at good growth opportunities in the future. We are also hiring freshers who take a little bit of more time to come into the mainstream as far as getting absorbed into projects is concerned. And I think that is why the headcount addition has been higher in the last 2-3 quarters.
And coming to your other question on non-T25, there is a very good reason why the growth is muted because that's by design. We believe that our T25 clients, the SDV program and their future technology is very critical, and they're more and more of them are choosing us to be their partners. Our priority is to make sure that we help them be successful in their journey, and we go deep and wide with them. That remains our focus, hence the growth from non-T25 muted.
Understood. Thanks for the answers.
Sorry to interrupt. I think we'll have to take just one last question. And as I said earlier, if there are any more questions, please write them to me and we would answer them and publish them on the website as well as on the exchanges.
Thank you. Ladies and gentlemen, due to time constraint, that was our last question. I now hand the conference over to the management for the closing comments.
So thank you everybody for your participation on the call. And as I said earlier, please feel free to write to me if you have any further questions. And we'll end this call. And once again, wish you a very happy Diwali. Stay safe and stay healthy. Thank you.
Thank you, everyone.
Thank you.
Thank you. Happy Diwali.
Thank you, ladies and gentlemen. On behalf of Dolat Capital Market Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.